Okay, so welcome to everyone. This is our fourth EBC Talks. Today it's powered by KISSPlatform and Dvorah and her team. Very excited to have you all and welcoming you all today. Please do write in the chat box where you are coming from. I mean, where you're based right now. This is also a way for you to test that the chat works for you, because it's very important that you make sure to log into your YouTube account. So again, welcome to everyone. Very excited to have you all together today for our fourth EBT Talks. We will be talking about what makes a blockchain startup successful. I think it's a very, very relevant topic for all of us being in the blockchain space. And I will now introduce you to Dvorah. Dvorah.
Hi, Victoria. How are you doing?
Hello. Very well. How are you?
Doing great, thanks. Thanks so much for inviting us to be here. This is a really exciting panel we have.
Indeed, indeed. So let me introduce you shortly, Dvorah. First of all, you are founder of KISSPlatform and KISSPlatform.
That's
and
right.
To say a few words about KISSPlatform, it's a platform where any idea can be tested, right? So you can kind of compare to other competitors or other ideas out there, but also to figure out what business model would work best for your idea, for your company. Is that correct?
Yes, that's right. We have AI-powered agile competitive intelligence, so you can find your competitors and their patents, and it does help you understand the market, the state of play, and who the players are, and what you can learn from them, and of course, what you'll improve yourself.
Really cool, really cool. I think later we will be sharing a link to your platform so people can test it out later on. So a few more words. I also wanted to tell the audience how we got to know you, Dvorah, because actually we got to know you a bit more than a year ago when we were celebrating our third edition of the European Blockchain Convention. That was in Barcelona before most of us knew that COVID existed. So we were all gathered there. All very happy, doing networking, doing business, learning a lot. And so Dvorah attended our conference in Barcelona in January together with one of her team members, Carlos. And then it was quite funny because in April, when the whole world was very depressed, we were going to organize our fourth edition in Copenhagen. We decided to send out a newsletter asking our community if they wanted to have a short talk, so they could tell us what they were up to. Then we had a great conversation with Dvorah and Carlos from her team, and they were like, Victoria and Daniel, how about you do a virtual conference? Yes. And we were like, virtual? How does that work? But yeah, so actually thanks to Dvorah and her team, we got this first push to launch our first virtual conference, which took place in September, and Dvorah was also part of that. So yes, and also just a little note about our next flagship event, which is the 5th European Blockchain Convention. It's going to take place from the 12th to the 16th of April. I hope to see you there all. But as I said before, today we're going to talk about how and what makes a blockchain startup successful. And Dvorah has 4 very great panelists to discuss this topic. So I'll hand the word to you, Dvorah. Once again, thank you so much for supporting us, both in our 3rd edition and our 4th edition and in this EBC Talks. Thank you so much. And I'll I'll give the stage to you. Thank you, Dvorah.
Thank you. Thank you so much for that great introduction, Victoria. So yes, I am Dvorah Graeser, founder and CEO of KISSPlatform and KISSPatent. So KISSPlatform, I said, does AI-powered agile competitive intelligence, and KISSPatent does patent services. Now, I myself am based in Eindhoven in the Netherlands, the world's smartest square kilometer. But our team is spread out over 3 continents, so we are fully remote. So I'd love to hear a shout out from all you remote folks. I'm seeing folks from all over Europe, and yes, South Africa, which is not part of Europe, we agree. But it's so glad to see you here. It's really wonderful. And thank you so much for everyone for attending. Now, I really wanted to have this panel, and I brought the idea to Victoria, and she and I were discussing it because In the past 25 years, I've been working to help early stage innovators protect their ideas and to really help them make a business from their ideas, to be able to monetize them. I've mostly been working with startups and other early stage innovators. And one theme I noticed over and over again is that my clients could always explain their technology very well, but they had a hard time explaining their business model, their market, or their competitors. Now, this is a problem when you're trying to create a great patent, but it's an even bigger problem when you're trying to create a great business. Many blockchain startups have been accused, fairly or unfairly, I'll leave that up to you, of chasing the technology perhaps more than the business. True or untrue? Let's talk about it. So here today, what we want to talk about is what can you as blockchain startups do? What can we sort through to have blockchain startups make a really great, successful business? And to help us get through this is our awesome panelists. So I will introduce each panelist, after which each one will give a brief overview on the subject. And we are going to start with Amit Sharma. He is the founder and mentor partner at Excel Ventures, an early stage startup investment firm incorporated in Singapore. He has a track record of running successful technology businesses in Singapore. Now we're going to start with a pre-recorded video from Amit because of time zone differences. So let's take it away.
Thank you very much. Yes, let's go for it.
In my view, the biggest obstacle for a blockchain startup is not access to capital or access to talent. The biggest obstacle is essentially reaffirming your position in the market, dealing with so much of misinformation. There are hundreds and hundreds of blockchain startups that have mushroomed over the last few years. So investors, customers, they struggle in terms of finding out which are the best companies, which are the legitimate companies from an investment perspective. And all the senior executives from large multinational corporations are even tasked to find out the right blockchain technology partners. Even they struggle. They find some solutions which may be good for them, some may not be good for them. So, and we completely understand that the challenges for a blockchain startup company is quite different from a regular startup company because of the regulatory aspects, because of the jurisdictions and the unclear policies. But having said that, the biggest challenge which I believe most of the startup face is to continuously prove their legitimacy and also to reaffirm their market position. The product market fit for a blockchain startup is quite different from a regular startup. At Excel Ventures, we call it a platform ecosystem fit model. So in that model, if you plot the stages of adoption on the horizontal axis and the levels of use case maturity on the vertical axis, what you'll plot is essentially the trajectory of maturity. So the stages of adoption starts with your developer community, which is the most vital group in my opinion. If you engage well with that group, that will lead you to early proof of concepts, your early validations, and what we call as confirmation use cases. Right? Once you have established your presence in that developer community, the next stage is to move to the industry-specific community and eventually to the actual or the whole ecosystem of that particular industry. Now, as we move upwards on that trajectory of maturity, we'll realize that the developer community and the use cases becomes much more sophisticated. There's much more depth in those use cases, and there's much more validation. So it's not there's no shortcut per se. You'll have to take those necessary steps to cross the chasm. Now, how much time would it take to cross the chasm would depend upon which industry you are in or which industry you are focusing on and what specific use case that you are dealing with. So that time would purely depend on these two factors. As the nodes of a decentralized ledger could span across various locations around the world, so it becomes very difficult to establish which jurisdictions, laws, and regulations would apply to that application. So it makes the situation much more complex for a blockchain startup. So it's very important to understand which jurisdictions, laws, and regulations would apply and what are the risks involved, and plan a risk mitigation strategy at a very early stage of your evolution. Also, it would be advisable for startups to look at permissioned or private blockchain use cases where it's somewhat easier to put some kind of a framework to regulate things internally. And another way is to go and play with the sandbox of the regulators. There are quite a few regulators who have made this provision essentially for the early stage startups who can come in and use the real economy data, work within those parameters or a controlled environment, and still not be without being worried about the regulatory consequences at the early stage of your evolution. So that could be an advice which I would like to give to most of the blockchain startups to go and deal with this issue upfront. And in private systems, it's always advisable to have some kind of a dispute resolution process established early on. Startup founders should also not shy away from taking expert advice on specific matters related to crypto assets, cybersecurity, the threats that we've been reading about as far as cyber attacks are concerned. Also related to data privacy issues. So they should reach out to the experts in the industry and have a foolproof strategy in place related to these aspects of the business. It depends on the use case, right? So you should first decide whether you want to use a public blockchain or a private or a consortium blockchain. So it starts with that. Before you get on your development journey, my recommendation to all startups is always to look for what's available out there in the market, right? Look at all the alternative blockchains that are available and choose the one which are a little more mature. That will help you to actually build a production-ready solution. Look at the options. If you want to choose a public blockchain, definitely you'll save a lot of cost, which comes with the customizations. But if you want to build your own private blockchain, then be ready for the cost and the complex process ahead of you. The blockchain technologies are very, very specific, and they have many internal nuances which we have to deal with. So look at all the possibilities first. Evaluate, do the cost-benefit analysis. Not just from a perspective of what would it cost to own that system, but more important is to see how much would it cost to the users who will be eventually using your system. So keep that in mind when you decide on which technology to use. But always go for a little more mature players in the market and see if they have already developed some proven use cases that will help you to establish your credibility in the market.
Thank you, Amit. So, Dvorah, I would leave the word to you again.
Great, thanks so much. So yes, and thanks to Amit. Of course, he has brought up many excellent points, which I'm sure our panelists will discuss. But to continue now, I would like to first introduce and then call on our first live panelists. Our other three panelists are live. I would like to call please on Nisa Amoils, managing partner at A100X and a securities lawyer, Forbes columnist, and best-selling author. She was named one of Business Insider's Women VCs to Watch, Top 100 Women in FinTech, and Top 50 Global Blockchain Thinkers. Welcome, Nisa, and thank you so much for joining us.
Thanks so much for having me, and hi to all of my friends around the world who joined in. I'm here in New York City, so happy to be with you virtually.
We can hear the traffic behind. We can hear you in New York. Thank you, Nisa.
So Amit brought up a lot of great points. All of the points I was going to mention as well. A lot of the regulatory legal insight, because I have a background as a securities lawyer, but I've been in venture capital now for 10 years. And I think that having that background is very useful for me to be able to advise our portfolio companies on what kind of regulation is coming. In the U.S., it's a lot of different regulators that have their hand in in what's happening in Europe is a different situation, and in Asia, but that is a large part of our value add as a fund, is to be able to advise on that. When you are setting up a blockchain based startups, you have all these other considerations that you don't have in traditional venture capital. You have this token reward staking distribution economics to figure out. And are you going to raise, an equity round first and then do a token offering? That seems what happens. And you have this kind of community that really the only parallel I can see is really Tesla, where you have this enthusiastic base that really distinguishes a lot of token-based projects from traditional either stocks or private equity. The choice of underlying blockchain technology, Amit spoke about very well in terms of cost-benefit analysis, public versus private chain, et cetera. And then also, once you launch, how do you sustain attention, advertisement, promotion for your project? It's an app, then maybe experience design is very important. Is it a service or a platform? And maybe customer experience is going to be more important. But a lot of times you see these projects that have launched just for the capital formation without a lack of, without product market fit. And, that's what happened in the ICO boom. And so we don't want that to repeat again. And also, how much are you going to raise? Sometimes you can raise too much and sometimes you can raise too little, depending on, what your actual use is for the capital that you're raising. That's another consideration. So yeah, I'll stop there for questions.
Okay, excellent points, Nisa. So we're actually going to continue with our panelist overview, talks and introductions, and then we will get to questions, I promise. Since you brought it up, Nisa, this is a great time to please remind everyone, please do put your questions into the chat, that in YouTube, which means you have to be logged into your YouTube account. And of course, we would love to hear from you. Now, to continue on to our next excellent panelist, whose name I am certain I'm about to butcher, and I apologize in advance, Maximilian Lautenschläger, co-founder of Iconic Holding, a global crypto asset manager and an early stage blockchain VC. He is also a business angel with a great deal of experience in this area. So Max, please take it away.
Thanks so much. Thanks so much, Dvorah. Yeah, my name is Max. I'm one of the managing partners and co-founders of Iconic Holding. Basically, we have two different companies. The one is Iconic Funds, which you already mentioned, which is more like a crypto asset manager. The other one is Iconic Lab, where we do early stage blockchain investments. Just to give you an idea, so far we invested into 12 companies. Our typical check size is between 50 and 250K. And we had great success over the last 3 years. We 6x'd our capital, so we are very happy about that. We always take an equity stake, but we are also open to token investments. At the moment, we're investing off balance sheet, just as an FYI for you guys out there waiting for capital. When it's about blockchain startups, first of all, the two panelists have already mentioned so many good points. I'm a little bit afraid I don't have so much more value add here. But what I definitely want to underline is how important UI and UX is. The people don't want to feel that they are using blockchain while you do an application. It's quite simple. This is also the reason why Google succeeded so immensely over the last 20 years. It's not because they had the best technology necessarily, but UI and UX was just perfect. And the same goes with blockchain. If let's say I buy tokenized real estate or tokenized piece of art, or a tokenized share, it doesn't matter. I don't want to feel that I'm using a wallet, or most of the people don't want to. They just want to have a beautiful UI, UX. They maybe want to have some data security. Maybe they don't want the big players to monetize their data behind their backs, but that's about it. Today, I'm not caring about what internet protocol I'm using. That's why I say don't overthink the whole the whole stuff about should you use EOS or Neo or Polkadot, Ethereum or whatever, go with Ethereum, to be honest. Yeah, go with a public blockchain. I'm a huge proponent of a public blockchain because I believe that's the only way how we can really give a benefit to the world and to the economy if we are using public blockchains. Because if we decide to use private blockchains, the same players, the same intermediaries will just act as private nodes. And I think this actually defeats the purpose of a blockchain, at least in my view. The next point I want to maybe touch is, of course, regulation. I mean, a lot of law is just getting adjusted now to blockchain. For example, what do we do with GDPR or the California Privacy Act in the US, which is quite similar to our GDPR directive. Then also money laundering, for example. If you trade tokenized securities, there must be a central party that makes sure that there is no money laundering involved. So still, we need some central parties. The world will not from today to tomorrow go completely decentralized. So find a very smart combination of centralism and decentralism where it makes sense. And then first of all, always ask your question, do I really need a blockchain? Because I've seen so many startups, especially in the ICO boom, where what Nisa was also referring to, it was just useless. But at the moment, I see great potential in the supply chain. I see a lot of potential in the real estate space. Of course, in the financial world, even though this will take some more years, that's what I believe. But regulation is a huge topic. And maybe even more, when it comes to fundraising, blockchain does not automatically mean you should do an ICO or an IDO or an STO or whatever buzzword is out there at the moment. If you have a B2C business model and you are very, very community driven, of course, feel free to go for an IDO, use Polkadot, use the hype that's in Binance at the moment, use the chain to do an IDO, why not? But if you're, for example, B2B and you are, for example, in the financial world, go for a traditional venture capital that supports you and gives you the strategic network that you will need in the future. I think that are the most important points from my part. I hope I was not repeating too much of what was already said.
Well, excellent points, Max. Thanks so much. And we are now going to continue, last but certainly not least, with our fourth panelist and our third live panelist, Antoine Dresch, co-founder of Korelya Capital. He has over 20 years of experience in investment banking with Goldman Sachs, UBS, and Morgan Stanley. So, Antoine, please take it away.
Hello, Dvorah. So my name is Antoine, So co-founding Korelya Capital. So we're a growth investor, so very different than Max. We have made two investments in the blockchain universe. One is Bitfury, which is a very large infrastructure player. They develop chips and they manage and they build data centers. So they really mine Bitcoin. And then a French company called Ledger, which is a security wallet, very well-known consumer brand, and they have evolved into a B2B custodian offering. On my side, when we decided to invest, it was purely based on our experience in Asia, in Japan, and in South Korea, where we saw a very popular need for a digital currency. So very generally, it was Bitcoin, but it can be any crypto and any blockchain tools. But we saw that there was a very bottom-up need to have a digital currency and to experience an asset class very different than the fiat currency or real estate. And so when we came back to Europe, we thought, we were very bullish on the Bitcoin in terms of asset class. So we effectively selected a miner. And what is very interesting in the miner, when we entered Bitfury, it was a very big business. They had more than $500 million of revenues, 150 million of EBITDA. And they had the capacity to invest in a lot of software. So we saw the development, but maybe too early into the software world. So we developed Lightning Network. We developed a lot of other software in music streaming. And so if I look at the situation today, we are maybe with 1/3 of the software that we have kept. And so in a way, we were too early trying to create software needs that people didn't have in a way. So my big takeaway is that when you developed, it's really like any other investment or venture. You need to have the product fit and the go-to market. And so if you don't have it, don't do it in a way. On ledger side, I think the lesson for us has been the ability, when you have scale on either B2C or B2B, you can effectively develop on both ends of the scale, and you can build very good position on B2B as well. And so we are effectively more putting, between 15 and 30 million per asset. So it's very different than very small ventures, but we are very bullish on the overall ecosystem. We have seen a massive institutionalization of the whole universe. We had meetings 3 years ago in the US where people thought that we were completely crazy to invest so early in Bitcoin, and you see what is happening right now. Not only the Bitcoin is effectively increasing in value, but there is more and more businesses investing in Bitcoin as an asset class, but also as a store of value, which is super interesting, I think, for the overall blockchain universe.
Excellent points, Antoine. I really like that. So before we go into our first question, which we would like to discuss with you, I would just like to remind everyone to please go on to your YouTube account, log in, make certain you can enter the chat. Please put your questions in the chat. We are monitoring that chat for questions, and we will bring them into the discussion as we go. A second point, a quick plug from us. Victoria mentioned the link before to be able to use our tool, the KISSPlatform tool, for free. We are going to post that also in the YouTube chat. So to start now on the questions, the first question that we have for our panelists, and I'd like to please start with Nisa on this one. What is the single biggest obstacle for blockchain startups?
So as I mentioned before, part of the obstacle, at least in the United States, has been the lack of regulatory clarity. I think we're finally getting to a point with the Token Taxonomy Act that we can direct the innovation to stay here and not seek regulatory arbitrage overseas. The other obstacles is just there tend to be these hype bubbles, and we're in one right now with NFTs. We as investors invest pre-hype, or we try to. For instance, my partner seeded a company called Dapper Labs that's doing NBA Top Shot now, and is worth about $2 billion in just the last 2.5 years, 3 years. So we see these as going into cycles, and I think that it's very important for these startups to focus on what the real world problems are that they're trying to solve. And now I'm seeing much more innovation happening in terms of healthcare, climate change, supply chains, title, identity, legal, tech, etc., that are just, use cases that are outside just financial services. And, we want to be investing there now because it's pre-hype. So I think market timing, market size, real focus on real problems are where startups should be focused.
Sorry, had a little mute issue there. So excellent points. Max, would you like to tackle that same question, please? And the question, just to remind our audience, is what is the single biggest obstacle for blockchain startups? So Max, what do you think?
So single, okay. I try to keep that in mind. I would say at the end of the day, it's mass adoption. I mean, I know it sounds stupid, but it is. I mean, if you look at stateofthedapps.com, for example, you can see how many people are transacting, for example, on Ethereum, on Clayton, on Neo, on EOS, and so on. And I mean, compared to internet numbers or to other applications that are not decentralized, it's still ridiculous. So I would really think before, is this an area where people would actually use blockchain? This is the major point. And as long as people still feel that they are interacting with a blockchain, I think they will not adopt it. It has to feel completely native to the people, as if they are just using their Google Chrome, for example, or their normal, I don't know, let's say Instagram app or something like that. If you feel that there's blockchain involved, then it doesn't make sense, and you will never achieve mass adoption, in my opinion. This is also one of the major reasons why Binance became so extremely successful. It was not necessarily because of the best trading bots or the best technology or the cheapest cost or whatever. I mean, yes, they did also actually quite well there, but it was from the very beginning the best UI and UX. And that's why they succeeded as an exchange, at least in my opinion.
Wow, really great point, Max. Okay, so then I'm going to ask that same question of Antoine. What is the single biggest obstacle for blockchain startups?
Hello, Antoine.
Antoine?
Yeah, you are on mute. So? No, we cannot hear you. No. Do you want to try to log in? Maybe you can continue with the next question, Dvorah, or
yes.
How do you want to do? Yeah. So
Antoine, if you don't mind. Yeah, sorry, Antoine, if you don't mind logging out and logging back in, that would be awesome. I don't know, technology, you know, it's awesome until it doesn't work. And these days, or at least I find like I'm spending a lot of time finding out why my tech doesn't work the way I want it to. So on then to the next question. This is actually one for both panelists. We are going to be having a US versus not US question, US versus basically the entire globe. And it has to do, of course, with our friend regulation. Now, the SEC and the US lawmakers, they are known to have very strong feelings on regulation. The rest of the world has been taking a different tack. I don't know, Nisa, maybe you would like to start with that. What kind of effect does it have? Should blockchain startups even start in the US? And if you think they should, what precautions should they take?
Yeah, it's a great question. It's been something that we've been struggling with for a while now under Jay Clayton, who was the former SEC commissioner. And I saw in the chat somebody asked about Gary Gensler, who's just been appointed under the new administration. And, you know, there's the OCC with Brian Brooks, who did a lot to involve the banks here and really advance the industry. The CFTC has been very proactive, and then you have, you know, FinCEN and FATF really being global. So, you know, I think we're finally starting to get to a point with the Coinbase S1 filing that the administration that's been putting off some of these issues will have to address them, and we'll get some clarity. Obviously, you know, it's getting more attention now as we've hit the $1 trillion market cap of Bitcoin, and a lot of what's happened in DeFi has kind of flown under the radar. The same with NFTs. You know, all of this is going to get addressed in due time. And as I mentioned, Warren Davidson, one of the congressmen here, just proposed again the Token Taxonomy Act, which is something that I think Liechtenstein pioneered. And so that will help a lot for startups that, you know, don't want to pay fortunes to lawyers who are, you know, trying to get them some opinion letters or even no action letters. Hopefully that process will now go away. You know, a lot of these agencies have established regulatory hubs that you can reach out and contact them and consult with them before you incur those expenses. So I'm optimistic that we're finally going to have a better roadmap for startups here, and that we can keep the innovation within our borders.
So just to make it clear, Nisa, you are pro-US as a location for blockchain startups. Did I understand that correctly?
So we invest in Euro startups, but obviously
Nisa, I can't hear you. Nisa?
Yes.
Oh, now I can. Yes. Sorry. Do you mind repeating that? I don't know. Tech. What can we say?
Oh, sorry. Yes, I was saying we invest globally, but obviously because we're based here, we are in favor of keeping innovation here as well and allowing the US to compete on a global stage.
Excellent response. Okay, now we're going to go to Max. And Max, I get the feeling you're going to be taking the other side of the coin, the outside US. Any particular place outside the US, or am I wrong? You're agnostic when it comes to where a blockchain startup should be based with regard at least to regulation.
I think, first of all, I would like to divide the topic into blockchain and as an industrial use case, tokenization of assets in general, and crypto assets as they are today. Yeah, so Bitcoin, Ethereum, and so on. Let's start with the one where the US really sucks, crypto assets. Because, I mean, if you see the SEC's approach and also the other authorities, I mean, Bitcoin, Ethereum, and so on are just very badly regulated in the US. The regulator is very conservative there. And I think it's very, very hard to do something in the crypto asset management space. There's no singular structured product on the exchanges in the US themselves. They all have to go to Canada or to the Caymans for that. I mean, yes, you have the Grayscale Trust, which still is the biggest investment vehicle in the world. I admit that, but it's not the best vehicle. Also, on the other hand, yeah, there are much better vehicles outside trust that you could invest in. What I like in Europe is, I mean, Germany has always been traditionally on the very, very conservative side when it comes to financial regulation. But now actually with crypto, it's a little bit different because we were the first major country or jurisdiction that actually introduced a crypto custody law that allowed banks to actually apply for the as a custodian to the regulator, and that way you actually make crypto assets bankable, because now banks can actually serve the clients, and also structured products, UCITS funds, everything is possible, or at least that's the backbone for it. And I mean, Germany was also the first country which actually accepted a structured product to the regulated market, not to the open market, which is a huge difference because, for example, institutional investors, they have to invest in the regulated market. They are not allowed to invest in the open market. So that's the crypto assets part. Then tokenization of assets. Germany, for example, is not that good. For example, in US, I think already in 2018 in New York, first buildings were tokenized and you could actually invest already into tokenized equity. I think, I mean, Nisa will much...
That was 2017, actually, in many buildings and hotels in the US were done. Yes.
And a particular, I forgot the name actually, it was one of the case studies I read, was very, very good, so very forward thinking. I think they now did a step back, but from a European perspective, it's still hard to invest into tokenized equities there. We now have a directive that allows you to invest into tokenized financial instruments, and you can invest into tokenized debt, for example, into bonds of companies and stuff like that. But tokenized equity is still very hard. Then with blockchain itself, I mean, for me, the biggest problem is, probably GDPR. And that's a European problem because it doesn't exist in the US yet. I mean, I think it will. I think the California Privacy Act will be rolled out towards the US, if I'm not mistaken. But I think, to answer your question, sorry, that was really long. I think as a blockchain company, I would still go probably to the US because you just have the deeper pockets, or to China because just a lot of things are happening there, especially in the blockchain space. As a crypto startup, I would definitely choose Europe over the US and China every time.
Very interesting points there. So you're distinguishing between crypto and blockchain. So then we did have a question from the audience from Marcel. Where do our panelists think the blockchain capital of the world will be for startups and innovation? Marcel pointed out that, in fact, Silicon Valley was the center of innovation for Web 2.1 and Web 1.0 and Web 2.0. But now we're coming into blockchain. We're coming into perhaps a new internet space with different regulations. First, Nisa, and then Max, please let us know which place will be the blockchain innovation capital of the world.
I don't think we have one place. I think we're decentralized, and that's the benefit of this industry. You know, you have so much activity in Switzerland and in Singapore and Southeast Asia and China and New York. So it's hard to pick one place. Just to go back for a minute to Max's last point about tokenized equity, I'm involved in a consortium that really is primarily European driven, with all the big banks and tech providers. They're way ahead. There may have been some activity here in the US in 2017, but since then, Europe is really racing ahead in terms of tokenizing illiquid assets.
Yeah, what I was referring to was, for example, tokenized real estate. In Germany, at the moment, you only have the option to invest into tokenized debt instruments. So I cannot say I own now this square centimeter here of this flat, because I would never get the ownership right. But I can, of course, participate in the financial rewards that this square centimeter of the wall might provide to the owners. So this is something we are still working on. But I also think in 2017, 2018, I believe the US was ahead. But I think since then, Europe became the better place to be probably for this kind of stuff. I also agree to Nisa. I don't think that there will be like the one capital for crypto or for blockchain. But for me personally, it's Singapore has a lot of stuff going on, definitely, but also Dubai. I'm just in Dubai at the moment. We opened a new office here. Also, a lot of new things are happening. For example, they think they will release a new paper for tokenization and crypto regulation, I think next Monday. So stay tuned there. I think a lot of things are happening here. And then, of course, I think Berlin, Tel Aviv are also two of the cities that you have to mention when it's about blockchain, but also London, 100%.
Agreed.
So that is really fascinating. It sounds like different countries have different aspects, different strengths. Of course, also in the technology scenes, different countries are known for having different strengths and different skills that they can bring to the table. First, Nisa, and then Max, what about things like licensing and for financial companies passporting, which is the ability to actually do business across different countries? And for other countries, this may be through licensing. Given that different countries do have different regulations, but they also have different strengths. And of course, startups often want to cooperate. And as you pointed out, Nisa, decentralization is the name of the game when it comes to blockchain. What do you think the future will be of cooperation between blockchain startups across countries? Do you see that happening internationally, or do you think everyone should just stay in one country and focus on fulfilling that country's regulations and only then go out and do business as a single entity? So what do you think?
No, I think cooperation is happening. That's exactly what's happening with FATF and the travel rule with crypto assets and exchanges. They're trying to make a coordinated effort across countries and, in terms of tracking counterparty risk for exchanges. So I do think we will get to, hopefully, eventually a global system of regulation that we can all benefit from. That is the hope. It's probably a long way away, but I think eventually we'll get there.
I mean, when it comes to financial instruments, I mean, Europe has, of course, we have the passporting regime, which allows me normally, if I get a prospectus approved in one of the EU countries, it gets passported to another country. Then, of course, you can also pursue a dual listing, for example, with Dubai or with Singapore. That's also possible. But that's now the really, really financial view on the things. When it comes to blockchain technology itself, it completely depends on the use case. For example, if I have a land registry, which is blockchain based, which for me just absolutely makes sense, then of course this is a country thing, because every country still wants to manage their own land registry. But when it comes to other things like the supply chain, it is so extremely important to actually think cross-border. Because I mean, I want to know where my food or where my clothes are getting sourced, and I want to know what materials were used along the whole supply chain, and that's an international topic. And also, when I think about tokenization and access to financial services, I mean, if we take into account that 80% of the world is still unbanked and doesn't have access to any financial services, I believe it's beautiful that we can establish an international framework where everyone can participate, at least from a technological point of view. Economic and political are two other points, can participate in a global, fractionizable and fungible market.
Excellent points. So we're going to thank you both for that. That is really eye-opening and enlightening. We're now going to, based on a question from the chat, move just slightly away from regulation, which it is true that blockchain companies often may feel like they're getting hit over the head with a bit. But of course, blockchain startups are also startups. And so here's the question. How can blockchain startups find product market fit? And is it different than for non-blockchain startups? Do you think there's a difference? Nisa, do you want to start?
You know, they're really, the only real difference is that oftentimes these projects are have a community behind them, and there are more stakeholders. And so I think it's about really leveraging your community in the right way and providing the right incentives. And that goes back to structuring tokenomics. And I think, you know, really it's like most traditional startups will pivot over their lifetime. The same thing with, you know, these types of startups, they're just going to experiment with different types of tokenomics. And yeah, that's my answer.
So you're saying don't be afraid to pivot.
Don't be afraid to pivot. Yeah, exactly.
Excellent. Okay, and Max, what's your take?
Communicate clearly with your community. That's the most important thing. Be transparent.
That's an excellent point. So knowing who your community is and communicating with them clearly would, of course, help for product market fit. And I do agree that I think blockchain folks, we are very lucky and we do have a very strong community. Great. So Max, then what do you think? Product market fit, blockchain startups different than non-blockchain? You've seen quite a lot over the years. What do you say?
I mean, I agree to all the points that Nisa just mentioned, but I work under the assumption that no one should feel that they are using blockchain. And as a result, there shouldn't be any difference from a product market fit point of view, in my opinion. The only thing, but I already mentioned this before, is of course, please make sure before that you really need blockchain in the industry where you are launching your startup. But then I think it's, if the need is there, the need is there. I mean, of course, you could say one thing. Everywhere where there's an intermediary that takes money that he shouldn't be getting, then of course, please use blockchain. Notary in Germany as a good example. They're always getting money for something which is clear to everyone. Yeah.
And that's a really great point. So there clearly are opportunities for disruption with blockchain to really serve folks better in the world, to make the world a better place that are not necessarily possible with other technologies. I did have a technology-specific question from the chat, which I thought was super fascinating. Are there still opportunities for a startup to pursue hardware, as in wallets and readers, along with software apps? In other words, is blockchain now all software all the time, or is there a role for hardware? Nisa, what do you say?
I think hardware businesses are very difficult. They require a lot of capital. You have inventory issues. I don't think most entrepreneurs in this space are really very well versed in those areas. So there might be opportunity for wallets and storage devices and other things. It makes it very complicated. So I think it's primarily software.
Okay, interesting. So you're going with software as a great focus for blockchain startups. Max, do you have a different take, or do you agree with Nisa?
I agree. I thought a little bit, but actually, if I think of the IoT space, I think I would say that actually hardware also makes a lot of sense. Now the question is IoT for you software or hardware? because there are always devices, of course, but at the end of the day, it is again about software that's on the devices. But I believe in the IoT space, there's so much things. I mean, just think about the smart home devices, how you could communicate with the grid, for example, how we could stop wasting all this electricity, how we could just maximize the usage of our grids. And I think this is a huge smart home and IoT topic, and combining that with blockchain makes so much sense, because I don't know how it is in the US, Nisa, but for example, in Europe, the market, the grid markets or utility markets are extremely fractionalized. So if I'm now charging my Tesla, I don't have one, but if I would have one and I charge it, I don't know, in the south of Germany, and I want to get, I don't know, electricity from the north of Germany, I think it goes through 5 different grid systems, and they all have like their own calculations for it. Yeah. So this is where I think that peer-to-peer through a blockchain network makes huge sense. And actually, there's also a company in Germany doing that.
Yeah, I think that's a good point. I think ultimately your car will communicate at the gas station, the charging station, with what it needs, and it will be deducted from your Bitcoin wallet or whatever it is. I think we will get there, and I think really it's about IoT sensors that are in these devices that will allow them to connect to blockchain technology to make that happen.
And also, I think smart oracles are very good examples. If we take hardware oracles, they also still need to be developed, and very often that's also the IoT space.
No, that's also a really excellent point. So it seems like there is going to still be a clear role for hardware, even also, especially within the blockchain space for startups. We have a very interesting question from the chat regarding the fact that blockchain hardware, and specifically mining, takes a huge amount of energy, uses a lot of energy. And of course, we're now all becoming very conscious about our energy consumption. First of all, what do you think the future of this would be? And second of all, what role could startups play in actually making hardware for mining and for assisting blockchain that doesn't maybe need to consume so much energy? Or is that the wrong question to be asking? Nisa, what do you say?
This is a hot topic of the most recent fear, uncertainty, and doubt around Bitcoin. Most of the answers that you see are that mining uses hydra-based energy. It's a lot more efficient than typical energy, and they compare it to other uses of energy that are using a lot more. But I think it gets blown out of proportion a bit with how much energy mining is taking up. Certainly, startups should be working on efficient energies and carbon reduction. Yes.
Great point. Max, what do you think about this rather large topic when it comes to startups and the role they can play and what they can do to contribute to this?
First of all, most of the blockchains are switching to proof of stake. So I think it is a Bitcoin topic more than a blockchain topic, I would say, in general, because with proof of stake, you don't really have that problem. With proof of work, you have the problem, but also there, just think about it logical. You would never use expensive electricity because then mining doesn't make sense. So you can go somewhere where electricity is cheap, and electricity is cheap where you have too much of it. And that's why actually a lot of electricity used for mining is electricity that would get destroyed otherwise. So I don't see this actually as a point. If it comes to startups and what they can do, I think there are a lot of things that startups could do to actually make the world a more sustainable space. In the supply chain, I think you can do a lot of things, but also when it comes to the grid, a peer-to-peer marketplace for energy companies, but also, as I mentioned earlier, the smart home devices that are actually sending the data, how they are consuming energy to the blockchain, and to the energy provider. I think that's a huge potential market for startups still.
Excellent point. Okay, so I'm very appreciative of both your points on this. Another question we had from the audience has to do with what could be called blockchain fixes, like Ether 2.0. Of course, when blockchain, Bitcoin first came, transactions were really fast, and now they're really not. And for many uses of blockchain, we need basically rapid transaction times. Not every blockchain use case requires that, but many do. So there have been, oops, I think we lost Nisa. Hope she comes back. Max, I guess we'll ask you to answer that. So what do you think then about these fixes, about new blockchains, public versus private? What do you see as the future, and what should startups kind of be banking on or paying attention to?
You mean from an infrastructure point of view? So what blockchain they should build their businesses on?
Yes, but also given the fact that we now have, for example, some of these fixes, Ether 2.0 and others, what do you think? It brings uncertainty to startups, I think, but maybe I'm wrong. What do you say?
I didn't really get the question, sorry.
The question is, with different blockchains being available, wanting to increase transaction speed, right? And also wanting to have, there are more choices out there for blockchain technology and for underlying blockchains that can be used. What do you see as, like, how should startups approach this question? Should they be looking for transaction speed now? Should they be flexible and be willing to change? Blockchains, if a new better one comes along, let's hop on that one, let's forget this other one. What do you say?
Yeah, I kind of touched on this point in the beginning. I believe it's not about the transaction speed and scalability, because it will come. I mean, Ethereum is now changing to Ethereum 2.0. It changes to proof of stake. And I think scalability will not be an issue in 1 or 2 years or whenever your startup ready. What I would really take into account is how many developers are on those platforms. I think the best example that I can give, I mean, just take your cell phone. I mean, what is the reason why Microsoft never succeeded with a smartphone? It's because their mobile operating system came late and it was not good. They had no developers, so WhatsApp was not working accordingly. So I looked at my Microsoft phone, and my WhatsApp was not working very well. So I switched to iOS or to Android. So I believe the platform that has the most developers, the most coders, and the most smart contracts and dApps at the moment will probably the one succeeding, because it attracts the most users. And of course, you could now, a lot of crypto kids will now scream at me and say, yeah, but Cardano is coming with such a great technology. Yeah, but where is it? I mean, where are the applications? What's built on Cardano? I don't know. And I like Cardano, actually. I mean, the concept of it. But the question at the end of the day is, where are the developers and where are the apps at the moment? And they are, in my opinion, on Ethereum.
That is a great point. And Amit had also brought that up. He said, where are the developers in your community? So if I understand that, what you're saying is, whatever technology you're picking or however you want to reach out to your community, you really want to make certain you're bringing your community with you, right? To make certain that they're with you, they want to join you. Developers, and of course, developers bring more users. Users want good products. So it sounds a bit like a chicken and egg question for a startup. Do you agree?
100%. And I mean, the advice I'm giving here is not definitely go with Ethereum. I don't want to sound too much like an Ethereum fanboy. I mean, of course, if for example, now, let's say you're an IoT company, very good example, and your smart home device needs to send, I don't know, 1 terabyte of data a day to the local grid, for example. Then with the gas cost at the moment on Ethereum, please don't do it. Please, it doesn't make sense. Yeah, I mean, of course, then I would go and maybe you could explore a private blockchain, even though I'm a fan of public ones, or you can try to build it, for example, on EOS. I mean, that's also another thing. A lot of, like Neo and EOS, they have venture capital arms all over the globe to support startups that are building on their infrastructure. So, of course, you can also go to an EOS venture capital fund or to a Neo venture capital fund and then get funding from them and build on those technologies. I don't say they are bad. They are actually very good. But I would expect the winner to be that one that has the most apps and most developers on it. And for me, at the moment, it's Ethereum.
So that is really fascinating. And by the way, we are trying to get back Nisa, folks. I'm sure we'll get her back in a moment. But right now we have the amazing Max to answer our questions. And we have another one from the audience. And that is, from your point of view, is there any risk occurring because of the lack of skilled blockchain developers? Like, is this a risk for startups? Is this a risk for a future a blockchain development. Of course, that also ties into what you mentioned before about the technology and the development. So what do you think?
I mean, I think in general in the world, we don't have enough developers and coders available. I think that's a general tech problem that we are running into. That's why the markets, I mean, look at India, also look at Portugal lately. They are also doing great stuff. There are a lot of very good coders. Or look in the Ukraine. You have a lot of good coders there. So I believe that's not a blockchain problem. It is a general tech problem that we are having. We have a lack of skilled people and talent there. But I mean, Solidity, for example, is so similar to other coding languages. I mean, it's not really an issue. And then you have other, I think, which one was it? I think NEM, I think is the smart contract platform that allows for any coding language, if I'm not mistaken.
I believe you're right, yes.
Yeah, so I think that's not really a problem anymore. I think, I mean, no one of them now came up with a new, I don't know, with a new coding language that no one is familiar at all with.
Great, because that will be here, because I would hate for there to be a lack of skilled blockchain developers. However, of course, there are great ways to reach out and to get more education on blockchain. I know, so I know there are many folks in the community can help with that. But then the next question would come, and this is actually a really good one. Let's assume then that we can actually get the developers. We have the technology. We have like Ethereum or other great blockchains, and we have developers making great apps that can be brought together. This then kind of throws open the question of the business model. Have you met any startups whose business model is now possible with blockchain, where it might not have been possible without blockchain previously?
Mining companies.
Okay, besides mining companies.
Obviously. No, I mean, let me think. Because supply chain, you can also do supply chain with an ERP system, even without using blockchain. It just, for me, makes the supply chain more transparent. Let me think. I mean, also land registry. Yes, a global fungible market. That's the point. I mean, sorry, I'm more from the financial side, more the crypto asset management side. What for me the biggest vision is that every single asset in the world, real world asset, financial asset, will be tokenized one day, and that creates a real fungible market in the sense of I can now trade, let's say, 1% of a Picasso painting against maybe 2,000 stocks of Amazon, and I can trade that against maybe 1 square meter here of the hotel room. So everything is on blockchain, and I can trade it against each other, and I don't have to go back through the fiat gateway again. I mean, also, yeah, a huge hot topic at the moment is also central bank digital currencies. I mean, everyone does it differently. Like Europe, US, we will probably only do it for central bank money and for commercial money. But Sweden actually takes the route that they will probably also release it for retail money. That's very interesting. And I think we will have an environment where everything is tokenized and fungible and fractionalizable, and we will just be much, much more efficient. And everyone with a smartphone can theoretically access this financial services infrastructure. You don't need a bank for that.
Excellent. So I'm hearing, of course, for trading of assets of various kinds, other kinds of financial transactions. But what about things, models, for example, that perhaps people were able to do it to some extent, but they weren't able to do it. They weren't able to do it well. For example, we did get a question from the chat regarding supply chain. So, for example, what do you think about supply chain as an industry where there's always been supply chain provenance? You're always trying to do traceability. Quite frankly, they haven't always worked quite well. If you recall the many food poisoning recalls with fresh vegetables in the US just in the past couple of years, as just one example, do you think that there are business models now in supply chain that are more possible with blockchain? And how can startups relate to that? Like, how would you talk, if you're giving advice to a startup, what kind of advice would you give?
So first of all, yes, definitely. I think supply chain is a very, very good example. And yes, there are definitely business models that now make much more sense than before. I mean, just as an example, let's say you got some bananas and they grow in Morocco. And then they have to get shipped to the south of Spain to enter the European market. And normally you have to make sure that they always have 16 degrees Celsius, for example. I mean, nowadays, You have a chip, and then someone on the ships check if it's true. Does it have 16 degrees? Then in the end, he signs, and the banana producer can claim, yeah, it was always transported at exactly 16 degrees. In today's world with blockchain technology and IoT, and you would actually put there an NFC chip that measures the temperature and sends the data directly to the blockchain, and then it's immutable, and everyone can actually see that it was the whole time transported at 16 degrees. And this is just one of many examples I could give here. But you're 100% right also with like all the poisoning and like the Monsanto glyphosate, it's called in German, I think it's the same in English, I hope so. Whether this was used or not is a little bit more tricky, because at the moment we have three different kind of smart oracles. We have hardware smart oracles, like for example an NFC chip. We have software smart oracles, which are APIs, most, for example, to Binance or to whatever. They also work very, very well. But then who proves you that the farmer in, I don't know, South India was not using Monsanto when the crops were there? And I think this is something where Chainlink is also working on, having smart oracle solutions that are before data enters the blockchain, that you have actually a consensus algorithm before it goes on the blockchain. And that's a very, very interesting field, because as soon as you can actually prove at the very beginning of the supply chain that everything was clean, then I think it makes so much sense to have the whole process of the supply chain.
That is a really excellent answer, and I agree, because clearly blockchain could be like a great enabler. And I also understand your point of view with regard to that there are things that we can do that could actually make us healthier and happier and really bring great improvements. I do have a question from the audience. They're asking about supply chain, but I'll just make it a little bit more general so you can answer as you wish. What kinds of things do you look for as an investor in startups? So you're a business angel. Your company has an early stage VC, as you mentioned. So what are the factors that you look for in blockchain startups that makes you say, wow, I really think I want to invest in this startup?
Yeah, and for me, there's no difference whatsoever between a blockchain startup or another startup. For example, personally, I'm invested into 6 startups, and just one of them is actually a crypto startup. The rest it's a logistics company, a prop tech company, one is food tech, so everything what I just like. And for me, it's always, since I'm investing, I mean, I cannot rely on KPIs because I'm very early stage. So for me, it's only the team and the market. If I believe a market has a high potential and there's a great team in front of me, ideally also a diverse team in front of me, then I'm investing. Because a good team in a good market will always succeed. They can pivot, they can change from today to tomorrow if the market environment are changing. And I think that's by far the most important thing. For one example, I mean, one of our portfolio companies, for example, they started as an impact investing company, very, very interesting for blockchain. And they were successful, but then they pivoted more towards supply chain, for example, and then they became even more successful. So, and this is what the team, it was a good team in a very interesting area like sustainability, which is both impact, can be impact investing, but also supply chain. And they just pivoted and then they succeeded even more. So a good team, a diverse team in an exciting industry. I think that's the most important thing.
Excellent. So a great diverse team in a really exciting industry, and then of course an exciting market. I really like those points. So folks, everyone who is now listening on the chat, you've heard it from Max. You can reach out and talk to him. Hope I'm not promoting you too much there on Max for your startups. But there's a follow-on question then. What about size of team? You know, these days it is possible to get a lot done with a really tiny team. But is tiny ever too tiny? Is big ever too big?
No, it depends. I mean, it depends. Yeah, sorry. Every consultant says that when they begin their jobs in a corporate. No, but it really depends on, I mean, what are you outsourcing, for example? I recently invested into a startup with 2 employees only. I was so surprised. There are only 2 founders, 2 employees, and they made last year, I mean, 1.8 million euro revenues and had a 30% operational margin because they are outsourcing everything. I mean, the whole production, for example, the whole logistics were outsourced. Their bookkeeping is outsourced. Their IT development is outsourced. So they can purely focus on business, and they are succeeding with it. But of course, there are other companies where you cannot do that. For example, fintech. I find it always very, very hard to outsource stuff there, because you need the compliance, you need lawyers, you need product development, you need so much stuff and so much bookkeeping and so much administrative stuff. So I think team size doesn't matter at all. What I like, and with diversity, I not automatically mean gender diversity. I mean, gender diversity would be one of the things, of course, I'm looking at, but I also mean different background, different countries, different culture, different education. I just want to see a diverse skill set within the management team. And if there are 3 women or 3 men or 2 men, 2 women, I mean, I don't care. That could just be an additional benefit. But I want to see a diverse skill set and a diverse team that gets along well together.
Excellent. Well, okay, great points. So to pivot just slightly, we did get a question in from the chat having to do with selling into enterprise and large corporations. Now, from my experience, I'm sure you've also seen this as well. Selling into enterprise, large corporations does mean long sales cycles, but on the other hand, can also mean a very large deal size. And the question is, what do you feel that enterprise and large corporations are looking for in blockchain startups and the innovation that they bring? Like, and how can blockchain startups communicate this to the large companies?
I mean, big corporates have normally the huge problem. Maybe, Dvorah, you are better in answering this question, but I think the biggest, or one of the biggest challenges is heterogeneity of their systems.
Heterogeneity, yes.
Yes, this word of
yeah.
the systems. I mean, they are not working like we startups. We maybe only work with HubSpot or only with Pipedrive or whatsoever for doing sales and marketing and stuff like that. I mean, they have huge SAP ERP systems, and then they have another bookkeeping tool, and they have so many tools, and they are all integrated together. So as soon as there's one, I give you an example. Deutsche Bank, I think like 5 or 7 years ago, no longer, 10 years ago, they had a project where they just had to add the one column. I think it was AML check done, yes or no. And this was automatically €1 million project, because it has to get updated in every single system and everything that's connected to it. What I mean with this is, with large corporations, of course, they want an easy process that blockchain can get integrated into the systems. One of our portfolio companies, Unipride, for example, they developed a framework that you have an SAP ERP system, and now you say, I only want to put the, let's say, supply chain module. Again, sorry for always saying supply chain here. I'm not biased. On blockchain, and now I'm choosing the blockchain where it should get deployed at. And then you choose, for example, NEM or Ethereum or EOS or whatsoever. And I think that's very important that, again, the company has to integrate it. Often the systems are huge and slow, and just make it as easy as possible. And for the beginning, just do a letter of intent, a memorandum of understanding. I mean, this is how IOTA works until today. Try to get prototypes done and proof of concepts. And as soon as they realize it's working, it's working. And the second big thing I'm seeing is, of course, reputational risk. In the asset management space, for example, the banks that are still not launching crypto asset products, they're just concerned about reputation. What if one of their wallets is getting hacked and they actually lose the money? So I think reputational risk, and also the integration into the huge systems.
So those are excellent points. I would just add one note. One part of the question also related to use cases, and from what I've seen with my clients, when they have succeeded well in selling into large enterprise, is, as you say, it's an integration, but particularly into process, because it is possible to integrate things in different ways, like through APIs. It is possible to bring blockchain in a way that the enterprise does not have to tackle the computational complexities. But if it is interrupting the process flow, then that will cause a problem, because, as you point out, enterprises, they're a bit set in their ways. They're not going to change, even if the technology is great. But if it integrates into their process, if it just kind of slides right in and makes their life better, then they're usually quite willing to at least talk about it.
Yeah, 100% agreed. Yeah, absolutely.
Excellent point. So we're coming down to the last couple of questions here. And yes, I agree. Someone just on the chat said very insightful answer, Max. So thank you.
Oh, thank you.
I'd like to get the last few questions up and just one more slight plug. Sorry, everyone. But since you're all still watching, we have the link up for the landing page to be able to use our tool for free. But we will also be having our own webinar to talk about using different tools. Google Patents, Owler for competition research, both are free, and also our tool, which is also free to try. So please, the link is going to come up under the chat. Please go ahead and click on it and sign up. Yep, and I see the link coming up from the EBC. Thank you so much. So then we're coming, this is very interesting. One of our last questions, I think now I have for Max, because before you have to let him go, Max, I could talk to you all night, but we'll have to wind it up. And here is a really big question to kind of wind things up with. How important and how big of a percentage does marketing take in basically making a startup successful? And is that different for blockchain versus non-blockchain startups? So what do you say?
Oh, that's a hard one. I would say as a startup, probably how you market yourself and how you present it to public is probably one of the most important things, because you can develop something great internally. If no one knows about it, how would you be able to sell it? On the other hand, I'm the kind of guy who believes in true value. So I'm not a fan of selling something which is not there. What a lot of startups also do, especially in the fintech space, very, very often, I see this in Frankfurt all the time, in London all the time, they sell their products to banks and say, yeah, this is like an AI-powered algorithm for like the new credit lines of customers that are well educated and academic. At the end of the day, they get the data, and then 10 people are sitting there doing everything manual. Yeah, so they are selling something which is not there, but it has a nice interface, and so they are selling it. I think the truth lies completely in the middle. So of course, create something important, create something good, something that the people really want to use, and especially in blockchain, please come up with something that has a good user experience and a good interface, because that's very, very rare at the moment. And then of course, market it like crazy. I mean, try to get the prototypes, try to get a proof of concepts with everyone. Don't be greedy. Revenues can come later, but first make sure you have good partners, you have good traction, and you get good names on your product.
That's an excellent point. So you're saying that marketing should be based firmly in your product doing what it says, not having smoke and mirrors, not promising things you can't do, but really building a solid product that solves a real market need. And then from that, the marketing can grow organically. And it sounds like, and do you agree or not, that if you're building that and you're also building your community, is that really the best way for the startup to start and not just throw like thousands of euros or dollars at marketing? I mean, what would you say for like a really early stage startup, just launched their product? What would you say?
Yeah, do a good PR stunt. That can always work. I mean, for example, I don't know, light up a huge Bitcoin fire in the middle of a city, and everyone will see the Bitcoin logo maybe, or something like that. I mean, something crazy. I think that's always good. Be creative. And I mean, especially in the crypto space, I mean, if you look at the success of Cardano, for example, or also Polkadot and Chainlink, it was extremely community driven. You don't have to spend on marketing when there are like thousands of people which are supporting you and always make the marketing for you. So make sure you have multipliers involved, make sure you build a community, especially if you have a B2C product, and then be creative when it comes to marketing. I mean, we have, for example, Iconic, we have also crazy ideas for this summer and also for our market entry in the Emirates.
Can you share some of your crazy ideas?
I think you will see, but I mean, let's imagine a huge Bitcoin logo, which all the banks have to see in the middle of a financial city. I think they will be very annoyed if they look out of the windows of their towers and see a Bitcoin logo the whole day, which is like their enemy number one. Yeah.
Okay. Okay, so maybe we won't do that. I've said this was the last question, but we actually do have one more last question because someone asked a question that's near and dear to my heart. I've been helping folks get patents now for 25 years, and someone asked how important are patents and IP for a startup? In this space, I'll give my answer, and I'd like to have your take, Max, real quick. So in this space, I am seeing a lot of patents being filed. We actually have done a study on this. Alibaba is actually projected to pass IBM in terms of all of the blockchain applications, patent applications they filed in the US alone. And the MasterCard president was basically saying how great their own patent portfolio would be on a call with analysts of when more central bank digital currencies become available. So it seems like the big players, they are filing more and more patents, and the space is getting more and more crowded. So I would say it's important for a blockchain startup in particular, given how hot the space is. But Max, feel free to disagree. What do you say?
I believe in a public blockchain environment, there should be no patents. I'm very much not none, but I'm not a fan of patents because I think it's technology that's available for everyone, and I think we should all try to make the code and the environment better. And that's why I'm not a huge fan of patents here. But as soon as it comes to business use cases based on blockchain, for example, I don't know how to. I'm lacking the English word for it. But I mean, just a business model. I mean, of course, do a patent there. But in the core technology around the blockchain, around Ethereum, for example, I'm a big believer in it should be available to everyone. What is very interesting, again, is the tracing and tracking of patents on blockchain. That's a huge use case. And maybe even there are old patents that are, let's say, not valuable anymore to the originator. But maybe you, in a new context, can use the patent for something else, and then you can actually, via a smart peer-to-peer marketplace, actually buy that and develop this further and incentivize the original patent holder to, keep it alive.
And Daniel just posted, that's a very excellent answer, but I just had to react. Daniel just posted a really interesting link. Will blockchain save the IP industry? It exactly points to your point, Max. So thank you so much for reading that up. I totally agree with you. I think that blockchain will be another way for us to be able to negotiate how we choose to share our ideas. Patents are one way to do that. They are not the only way. And in fact, there are also patent pools that are being put together. Jack Dorsey of Twitter, I believe in his role as CEO of Square, is actually putting together one such patent pool to help protect blockchain innovation and blockchain startups. And of course, the blockchain itself could very well make that possible.
Yeah, 100%.
Excellent. So I guess, I don't know, Max, do you have time for one more question, or do you have to take off?
Yeah, let's go for a last one, or for last three, or whatever you like, Dvorah. I'm completely... Excellent. Yeah, I just have to go to the bathroom very soon.
Okay, we will definitely not go that far. My goodness, because I said I could keep this going all night, but obviously at some point we have to stop. So here we have a question. When is Bitcoin going to reach 100K? And my follow-up to that would be, will it have an effect on blockchain startups, or is it just one of those things?
So since we are an asset manager, I'm not allowed to do a price prediction, but I can always refer to other sources. And if you take the stock to flow model, then we should achieve the 100K in August 2021 if the stock to flow ratio holds true. What it did over the last 8 years. For me personally, a 100K in August sounds a little bit too high. I believe it will consolidate a little bit between 50 and 60K over the next 2-3 months, but that's just what I think. It could, as always, it can crash down, it can go up. It's crypto, it's crazy. And to your question, Dvorah, I think it's always good when crypto goes up. I think it brings much more capital to the blockchain markets. It gets more attention. On the other hand, people then again confuse Bitcoin with blockchain all the time, because there are three completely distinct topics here. The one is tokenization of real assets. Then I see crypto assets as they are today, and then I see blockchain as an industrial and business use case.
Wow, that is really a really great point. I do agree with you. I do see more money flowing in from investors as crypto goes up. Some of them, of course, are selling their own crypto to be able to do it, and as interest then increases, we end up with more publicity. But I also agree with you, completely different things. But it still does seem then we are going to be seeing a rosy future then for the next year, and I'm sure much longer, for blockchain startups.
Yes, definitely. I think it's going to be a great year, and I mean, I'm personally very bullish on crypto at the moment. And yeah, I mean, otherwise I wouldn't be co-founder and managing partner of a crypto asset management company.
Awesome. Well, you heard it here, folks, first from Max. So everyone, if you haven't founded your blockchain startup, I urge you to go out and do so. Find that great product that you can make, find that great solution, and go out there and do it, because we all need innovators to make this world a better place. And on that note, I would like to end. I would like to thank Max, whose last name I will not even try to pronounce again. Thank you so much for all your time, for your amazing insights and amazing answers. I would also like to thank, in absentia, Nisa and Antoine, who are two live panelists who unfortunately had to drop off. And I would also like to thank Amit. Amit, when you're watching this, thank you so much. Your introductory video was so helpful. And thanks to you, Victoria, and thanks to everyone for attending. I had such fun. I hope everyone had fun too.
Yeah, thanks so much. It was an honor to be there, and thanks so much for the great organization and the great panel, Dvorah and Victoria. And I hope, even though I was alone at the end, that still there were enough insights for the audience.
Indeed, indeed. Thank you so much, Dvorah. Thank you so much, Max, Nisa, Antoine, and Amit. It's been amazing. I look forward to see, well, the follow-up question probably we'll receive tomorrow, or the day after. We will be publishing a few articles based on what you've said. So look after that. So the conversation will continue. But I think it's been an amazing conversation. Thank you so much. Thank you again, Dvorah, for supporting us again and again. And as we've just shared in the chat, if you want to test your blockchain idea, Dvorah is doing a workshop on the 25th of March, sorry. March, yeah, next week. So remember to sign up there if you want to test your idea. And what else do you want to say? Yeah, folks, all of you, thank you again for joining us. We are also celebrating our flagship event from 12th to the 16th of April. I hope to see you there. And again, I mean, it's amazing to see how this community is growing. Make sure to get more people on board. At the end of the day, we're building the future. So even though you're new in the space, I mean, it's important, yeah, to be there, to educate yourself, and at some point be part of a startup. If you want to build something, be part of a bigger company that's building something. Yeah, let's build the future, basically. Again, thank you, Max. Thank you, Dvorah, and thank you to the rest of the investors. See you soon.
Thank you. Bye.
Thank you, everyone. Thank you.